You probably have heard of the big three: Vanguard ETFs, State Street, and BlackRock. Currently, BlackRock manages over $10 trillion in assets. However, Larry Fink started by losing $100 million and merging with investment companies like Barclays and Merrill Lynch. Today, we will share how BlackRock became the king of ETF. In January 2022, BlackRock Inc. became the first public asset manager to hit $10 trillion in exchange-traded funds for beginners. The company shared that investors pumped $104 billion into their ETFs 3 months before ending December. Additionally, the S&P 500 gained 27% last year and 11% in the previous quarter, consisting of ETFs and mutual funds. Therefore, BlackRock now manages $2.6 trillion in those assets. The firm's hedge funds and other businesses have also risen to $265 billion. Meanwhile, employee compensation and benefits increased from $218 million. The firm has increased staff pay as inflation surges. Base salaries have risen by 8% for all staff at the director level and below. Chief Executive Officer Larry Fink said in a statement, "Our business is more diversified than ever before." Active strategies, including alternatives, contributed over 60% of 2021 organic base fee growth. In 2013, BlackRock made Fortune magazine's 50 most admired companies, but not without controversy about China and its other political associations. Shortly, we will discuss how BlackRock rose from its bad press to conquer the world of asset management. Roughly 13 years ago, publications were writing about Fink's reverse growth. He had lost a spot in a political race due to Washington's bipartisan distaste for Wall Street tycoons, and the company was slowing down its winning streak. When Fink gave a commencement speech to UCLA students in 2016, he revealed how he had been scared by some of the issues that had affected him, including an acquisition that changed everything. "I believed I had figured out the market, but I was wrong, because while I wasn't watching, the world had changed." If this is oddly familiar, it is because the last bit is a lyric reference from Passenger's song, David, Off the Whispers 2 album. The timely acquisition of Barclays' global investment at $13.5 billion arrived with a host of interlocking challenges, including growing U.S.-China tensions, climate change, and the socio-political landscape in the U.S. Wall Street tycoons quietly expressed dissatisfaction with the company. Many accused them of what they described as a tragic mistake. George Soros said they were pouring investors' money into China despite President Xi Jinping's Communist Party leading the country in a not-so-transparent way.
China.
However, that did not stop Fink from becoming the most influential person in global finance. He is now the guy every president and prime minister wants handling their money.
Man, I want to be that guy so bad.
In fact, there is no corporate boardroom in the world with over $10 billion that he does not have stakes and investments in. Later, when Fortune magazine published its 50 most admired companies in 2013, the top 4 were the usual tech suspects: Amazon, eBay, Facebook, and Google. Fink's BlackRock, formed in 1988 by Fink and 7 partners, made the list too. The company started with 8 people that Fink trusted and is now in the top 5 most admired companies worldwide. But that would not have happened if the mergers and acquisitions of 2004, 2006, and 2009 did not occur. Shortly, we will tell you how they moved from 150 employees covering small investments to the $1 trillion Merrill Lynch merger that changed everything. Larry Fink, born November 2, 1952, grew up in Los Angeles' San Fernando Valley. His mother was a California State University English professor. Fink studied political theory at UCLA, then took graduate classes in real estate. After school, he went to Wall Street. First, Boston hired him in 1976. He was in the bond trading department, mainly trading mortgage-backed bonds. He became manager by 1978. Fink became the youngest managing director at First Boston and the youngest member of its management committee at 31. In 1986, Fink's desk lost about $100 million when interest rates unexpectedly fell. Despite Fink's history at First Boston in the preceding decade, He eventually quit in early 1988.
Doing what corporations do.
When he quit, he went to Ralph Schlosstein from Shearson Lehman. They had been phone pals who shared how much they hated their jobs and wanted to start ETF investing for beginners. Their political allegiance to Democrats made it easier for them to decide to begin BlackRock. A few days after his resignation from First Boston, Fink invited a select group to his house to discuss the new venture. Capito, Barbara Novick, Ben Golub, and Keith Anderson came from First Boston. Together, they started a new bond investment firm built on modern technology and sounder risk management. Susan Wagner and later Hugh Frater from Shearson Lehman were invited. You should subscribe to the channel to get an invite too. Just kidding. You might never start a company, but still, subscribe. Within the first 6 years, the firm managed about $23 billion, and about 150 employees had joined the 8 founding partners. In 2004, BlackRock bought State Street Research, a MetLife asset managing line, for $375 million. In 2006, Fink learned that Stan O'Neill was selling Merrill Lynch's asset management arm and bought it too. Once that occurred, he had $1 trillion in assets under his management. Soon, even the U.S. Treasury and Federal Reserve called upon them to clean up the financial mess. While people commented on their proximity to power, they could not deny that the company was doing something right, especially when it acquired the British money management arm of Barclays plc. It was over for anyone who cared to compete. Now they were all scrambling for second place. Ever wondered why some companies are never mentioned during ongoing U.S. stock conversation? Today, we shall tackle the elephant who is not in the stock room. Next up is why Samsung is not listed on the U.S. stock market.